Hey everyone, welcome back to the channel. Today we're going to talk about one of the most shocking and fascinating stories in modern economic history, the story of Japan's lost decade, or actually what many now call the lost decades. It's a story about how one of the richest and fastest growing countries in the world suddenly slowed down and stayed stuck for nearly 20 years. So sit back, because this is not just about Japan. It's about what happens when an economy built on debt, speculation, and overconfidence finally hits a wall. Let's rewind to the 1980s. Japan was booming. After World War II, Japan rebuilt itself at a stunning pace. By the 1980s, it had become an economic powerhouse. Its companies like Sony, Toyota, and Panasonic dominated global markets. Japanese products were everywhere. Cars, electronics, cameras, watches. The world started calling it the Japanese miracle. Its stock market and property prices were rising like crazy. Tokyo land prices were so high that people joked the Imperial Palace in Tokyo was worth more than all the real estate in California. That sounds insane, but it actually wasn't far from the truth. Banks were lending money easily. People borrowed to invest in stocks, land, and businesses. And because asset prices kept rising, everyone felt richer. The Bank of Japan, the country's central bank, kept interest rates low, fueling even more borrowing. It was a bubble in every sense of the word. Then came 1989. The Bank of Japan got worried. Prices were out of control. So they raised interest rates, slowly at first, then more aggressively. And that's when the bubble burst. The stock market crashed in 1990. The Nikkei index, Japan's version of the Dow Jones, fell from nearly 39,000 points to less than 15,000 in just a few years. Property prices also collapsed. Overnight, people and companies found their assets were worth far less than their loans. Banks were sitting on mountains of bad debt. And unlike in the US, where the government might step in quickly, Japan's response was slow and hesitant. The 1990s became known as Japan's lost decade. But the truth is, the stagnation didn't just last 10 years. It stretched into the 2000s, and some say even today, Japan hasn't fully recovered. So what exactly went wrong? After the bubble burst, Japan faced what economists call a balance sheet recession. That means people and companies stopped spending and investing because they were too busy paying off old debts. Even though interest rates were near zero, nobody wanted to borrow. They didn't trust the future anymore. So demand collapsed. Businesses cut back, wages froze. Prices fell year after year, a situation called deflation. Now, deflation sounds good, right? Prices are going down. But it's actually terrible for an economy. Because when people expect prices to keep falling, they delay buying things. If you think a car or house will be cheaper next year, why buy it now? So consumption falls even more. And businesses make less money, leading to layoffs and more stagnation. It's a vicious cycle. The government tried everything. They spent billions on public works projects, roads, bridges, tunnels. They cut interest rates to zero. They even printed more money. But nothing seemed to work. Why? Because people didn't have confidence. Once an economy loses faith, it's very hard to get it back. Another big problem was Japan's aging population. By the 1990s, Japan had one of the oldest populations in the world. Fewer young people meant fewer workers and less consumer spending. So even as the government tried to stimulate the economy, demographics were pulling it backward. Japanese culture also played a role. In Japan, failure carries a huge stigma. So many banks and companies tried to hide their losses instead of writing them off. They kept lending to failing firms, the so-called zombie companies, just to avoid admitting mistakes. This kept unproductive businesses alive, but sucked money away from newer, more innovative ones. It was like trying to revive a dying tree by watering dead branches. Meanwhile, the rest of the world was moving forward. In the 1990s, the US entered the tech boom. Europe was forming the European Union. China was opening up and rapidly industrializing. But Japan stayed stuck. its economy flat, its prices falling, its people losing hope. By the early 2000s, Japan had a new word in its vocabulary: deflationary mindset. People simply stopped expecting growth. A generation grew up knowing only stagnation. Savings piled up, but investment didn't. Interest rates stayed near zero for decades. Even when the rest of the world faced crises like the 2008 financial crash, Japan didn't fall much because it had already been flat for so long. In 2012, a new leader, Shinzo Abe, came to power with a bold plan called Abenomics. He launched a three-arrow strategy. First, massive government spending to boost demand. Second, aggressive money printing by the central bank. And third, structural reforms to make Japan's economy more flexible. For a while, it seemed to work. The yen weakened, exports rose, and the stock market improved. But the deeper problems, aging, low productivity, and weak consumer confidence, were still there. Even today, Japan's growth remains slow, hovering around 1% a year. So what lessons does the lost decade teach us? First, bubbles always burst. No matter how strong an economy looks, unsustainable asset prices eventually collapse. Second, once confidence is lost, it's incredibly hard to rebuild. And third, demographics and psychology matter as much as money and policy. An economy isn't just numbers, it's people's hopes, fears, and expectations. So, if you think about it, Japan's story is a warning for the rest of the world. Many countries, including the US, China, and even India, have faced similar challenges of high debt, property speculation, and aging populations. If they're not careful, they could repeat Japan's mistakes. But it's not all gloom. Japan today is still a rich, advanced, and peaceful country. Its people enjoy high living standards, low crime, and cutting-edge technology. It didn't collapse, it just stopped growing. In a way, Japan chose stability over chaos. And maybe that's not entirely a bad thing. Still, the lost decade remains one of the most important cautionary tales in economic history. It shows how quickly prosperity can turn into paralysis and how difficult it is to restart growth once people stop believing in it. So, the next time you hear about soaring stock prices or booming property markets, remember Japan. Because sometimes what looks like unstoppable growth is really a bubble waiting to pop. Thanks for watching. If you found this story interesting, don't forget to like, share, and subscribe. See you in the next video, where we'll uncover another real-world story that changed the course of history.